Let's look at how to make the adjusting journal entry for prepaid insurance. Here's the information given. Taper Company paid an insurance policy in full for $4,800, and it covers the calendar year from January 1st of 2024 through December 31st, 2024. So this insurance policy is for a 12-month period. We call this prepaid insurance. It will show up as an asset for the company. They paid it in advance. As every month passes, a portion of that insurance will expire. Because we're covering a 12-month period, we need to adjust that account for the expiration of that month's insurance coverage. I'm going to give you 3 steps here that we're going to take a look at to determine what that amount will be and then how to adjust that account. Let's look at the first step here, and that is, first of all, we determine the balance in the prepaid insurance account as of January the 1st when that payment was actually made. And again, we paid $4,800 for 12 months beginning January 1. In our journal here, we will just say 1/1 of 24 is the date we're making this entry. We are increasing our prepaid insurance account. And we know from our normal account balances, and if you haven't watched that video, we also have that out there on our channel, that and prepaid insurance, again, is an asset account. An asset account has a normal debit balance. So we're going to debit this account for $4,800. We would credit cash because we paid it in full at the time, so we're going to credit cash. I'm not interested in the cash journal entry on this one. I'm really just showing you the prepaid insurance. But this is what the journal entry would look like when that payment was made. Let's look now at our T account for prepaid insurance. We debited $4,800, so let's put that $4,800 here on our debit side. And you could put the date, 01/01, if you would like, and that way we know when that payment was made. Again, we're not going to look at the cash account. So that's our balance as of 1/1 is $4,800 debit in our prepaid insurance. So that was step 1. We have actually determined that balance and we went ahead and journalized it. For step 2, calculate the monthly amount of insurance that will expire. It's for a 12-month period, so we take the total $4,800 and divide it by 12 to get our monthly insurance amount, and that is $400 per month. At the end of every month, we'll need to make an adjusting journal entry to adjust that account to the correct amount. Prepaid insurance will need to show that part of that coverage has expired. And as we said, that's going to be a $400 per month insurance adjustment there. So what we're going to do is we're going to debit an account called insurance expense, because that is an expense to the company. We're going to debit the expense account for that $400 monthly charge. We are adjusting prepaid insurance, which means we're going to credit $400 every month from that account to update the account balance to the correct amount, showing the expiration of insurance. Here's our $400, let me go ahead and put it over here, credit entry to our prepaid insurance, and that will be on 1/31. Now at the end of this entry, we can see what our prepaid insurance balance would be. So $4,800 debit minus $400 credit would give us a balance of $4,400 in our prepaid insurance account. Again, this adjustment would be made at the end of every month throughout the year. Here would be our January, then we would have one for February, all the way through December. And at the end of December, we would have 0 balance in this account because we would have already expensed out all of the prepaid insurance for this particular policy. For me, I would probably name this whatever the insurance is. So if it's the plant insurance premium, I would probably put that at the name here and have an account maybe for each one of the different policies. But in this case, we're just pretending that we only have this one account. Our balance would be $4,400. This would be our insurance expense adjustment where we're debiting the $400, and this would be used on our income statements. We have revenues minus expenses. This would be one of the expenses we would use on that income statement to lower our taxable income, if you will, and to help us pay less tax there. Again, we would see an entry for even in the insurance expense account for each month. So we could say this one was on 1/31. We would have an entry on end of February, end of March, through the end of December for all of this expense that we would have. And this is just how we adjust this account to show that we had an asset worth $4,800 of insurance that we prepaid. As each month passes, part of that expires and we wouldn't have that full amount. But this is the journal entry for the first month on the adjusting journal entry for insurance expense.